Hello. So, here's another short quiz for you. You can kind of take a look at the 1 month chart of Blue Apron, and you will see that this has been going upwards and upwards, up and up. Take a look at the 6 months. It's a little bit of a more moderate story, although in the past few days it's been going upwards. And the thing is, today actually 26% in terms of its upwards movement, and another 10% after hours right now. So what is happening with the stock? Is it a buy finally? Now I want you to take a look at the max chart here. Take a look at this one. In its IPO days, this was like 150 or so. And if you take a look at the company analysis page here in our company profile, you'll see that its IPO was back in 2017. It's not even a very old company here. It's been absolutely destroyed, as you can understand. So the company has been absolutely decimated. It's lost pretty much all its value. And just in 1 year, 52%. But again, if you take a look at the max chart or the 5 years chart, you will see that this has been down pretty much every day. And this is just not looking like a company that anybody would like to hold, is the thing. Now, a short squeeze could happen because we have a lot of shorting. Everybody thinks that this is going down, and then buyers step in and they cause a short squeeze. Hence, short sellers are covering, and so the stock price is going upwards. But is it a buy for a long-term shareholder is the question. And you can take a look at the metrics here in our tool. Again, remember that you can always take a look at our tool here and become a member by becoming a Patreon. You can visit our Patreon page in the links in the using the links in the description box below this video. Become a Patreon and basically gain access to this tool. And if you are new around and you enjoy this kind of content, please leave a like as well. That helps a lot. And thanks for that. Now, P ratio that is negative, price to free cash flow that is negative as well. So the company is not profitable, not making any free cash flow here. It's been only issuing shares because they need to be making money somehow. And if you cannot make money from operations, you either have to get a debt, you have to get a loan to fund your operations, or you have to issue shares and so get more shareholders, pretty much dilute the current ones, and that's a horrible story for investors, as you can understand. Now, in terms of revenue, this is going down, and this is another horrible thing to see here. This is a new company that is dying already, and it has a $213 million market cap, and the revenue is going down. That's a very, very bad sign for a company. Now, net income has been growing, but it's still in negative territory with the same thing with the free cash flow. So it's a story of negatives here, pretty much. Not much debt over here for the company, but why would you have that much debt if you have so many outstanding shares here? If you can actually issue so many shares and get funds from your investors, why have so much debt is the thing. And so that's why they don't. But returns are horrible, no margins here. Pretty much a story of horrible stuff here. And if you take a look at the financial statements, you will see here in their income statement, a story of revenue going down is what I told you about earlier, and net income again negative. A little bit better, but still negative here. And in terms of their balance sheet over here, you will see that everything comes from pretty much the additional paid-in capital here, which is basically the money that the company got from issuing shares. And in terms of total equity, going down. So yeah, this is just looking so bad here. And in terms of the free cash flow that the company generates, you can see here that again we're looking at negative free cash flow pretty much every year. A little bit better, although worse than last year and 2 years ago, so better than like 3 or 4 years ago, but still pretty bad here in terms of what the company is doing. So many negative things, many things not to like here, and so this is already looking like a company that I would basically not even think about holding. But I kind of want to take a little bit of a closer look at our stock evaluation tool. Maybe it can give us a potential entry point. The problem is that you'll see here that the revenue growth of the company has been in negative territory, so it's actually losing revenue here. I'm gonna go maybe a little bit less in terms of loss, but I'm still gonna include some negative years because again the company is in negative trajectory. So I'm gonna go minus 4%, 0 and 4 and 3 here, or 4. Let's just say 4. The big problem is the margins. They are negative, and they are very negative. And so what can we do with that? We have to assume marginal profitability, that at some point the company will assume profitability, will actually understand, will actually manage to be profitable. The big problem with this company is that it has nothing proprietary. It's like a meal delivery service that any company can do, and so they don't have something that others cannot really copy. There can be a massive amount of copycats doing the same thing. It's a commodity, and so these are companies that I don't really like investing in, because again they can have competition pretty much the next day. It's so easy to replicate what they are doing, and so their margins will be really suppressed. They will have to offer massive amounts of discounts. They will never make money. It's going to be very tough for some of these companies to make money, for a company of this sort to make money. So I definitely wouldn't like to be investing in something of that sort. For free cash flow margins, I'm going to go with the typical thing, 80, 90, and 100%. And in terms of the annual return, I'm going to ask for 15% over here, because this is a much riskier company. Again, for the reasons that I explained pretty much just now and throughout the whole video so far. I hit calculate, and you will see that with our high estimates, we can say that this is a buy, since it's gone down that much already. But again, the big problem here is that I'm already assuming very positive net income margins. 5% is much more positive than what they have been doing. Much better. Their 5-year average has been -17%. So this is significantly better than their average, and I don't have trust in that. I don't think they are gonna achieve that. But if they do, then it may be a buy, really. But again, I wouldn't more than likely be buying into such a company, because I don't think it's a business that you can be investing as a value investor in the long run. It just doesn't have that factor that would allow it to keep growing and propel it upwards. It's more or less a meme stock that you can potentially trade and make some money, if you are a day trader, but holding for the long term, probably not a good idea at all. And that's what I wanted to talk about in terms of Blue Apron. Again, it's trending massively right now in the markets. We can probably take a look at our page here that I have, the module that I have about the social trends of the company, and you will likely, you will see it trending right now pretty much everywhere. It's massively in the green in terms of posts, comments, likes everywhere, as to be expected, frankly. But again, not a company to be buying right now. Again, you can use our tool to analyze whatever you want, but it is just not a company that I would be buying right now. And that's what I wanted to talk about. I'm actually a little bit curious about the price targets. Do we have anything here? No, not really. So not even reported price targets for this one. Yeah, it is a meme stock. It's you're not gonna be seeing a lot out of this one. And the news, it's pretty much about the short squeeze is the thing that has lifted the stock. Nothing in particular in terms of the financials, which I hate to see for a company, and I definitely won't be adding this one to my portfolio. So thanks for watching, and in the meantime, you may want to take a look at a video that I made earlier today, and I'm talking about Alibaba and some interesting things that have happened around the company, and some investments from the Asia side, which they have actually quadrupled their investments for Alibaba and some other Chinese stocks. Also, they got a lot of. So interesting to watch. Thanks for watching this one. Take a look at this other one, and I'll see you in the next video, guys. Bye bye.